Hi there, welcome to Kneppy Invest, and welcome to an answer and question video slash reaction video as well. This is from Ben Hutchison, who asks, can we get a reaction evaluation video for Bell Potter's top financial year 26 picks, which came out today? I'm recording this video on 13th of August, but it did not come out today. So we are talking about a few months ago. But what I'm going to do in this video is I'm going to have a look at their financial picks, their stock picks for financial year 26, and also compare them to their picks for 2025. The reason I'm doing that is I've done a few videos on their stock picks in the past. And what I noticed last year is their picks don't change all that much. Some subtle differences, subtle changes, but no big differences from year to year when it comes to Bell Potter's top stock picks for the financial year. So what I'll do is I'll have this year's picks, their picks on the left, and last year picks on the right. So let's get stuck into looking at Bell Potter's top stock picks for financial year 26. Okay, so here we are. As I said, we have their picks for this current financial year on the left-hand side and last year's picks on the right-hand side. Now, the first thing I'm going to do is just have a look at who chose these companies. And they do have a list of their analysis, I suppose you call it. And what I'll do is I'll just decrease the size of my video. You don't really want to see my head or anything like that. And we can just see who is new for Bell Potter or in Bell Potter. So here we go. So remember, on the left-hand side is this year, on the right-hand side is last year. I'm saying that for myself, maybe not for you. Now, they do have quite a few different sectors here. So listed invested companies, agriculture, FMCG, technology, diversified financials, real estate, retail, industrials, healthcare, gold, base metals, strategic minerals, and processing technologies. A little bit different than last year, which was just strategic minerals, energy, mining, industrial services. A little bit different from last year, which was just mining services. Apart from that, everything else was quite similar. And not only that, most of the analysis haven't changed. There's subtle differences, subtle changes, but to be honest with you, fairly similar. LIC's Keon Sapontes hasn't changed. We have Snape, not Harry Potter Snape, but Jonathan Snape for agriculture and FMCG. That has not changed. For technology, Chris Savage and Michael Ardrey, that has not changed. Diversified financials, Hayden Nicholson and Marcus Bernard, that has not changed. Although last year, Marcus Bernard was first. This year, it's Hayden Nicholson. So maybe it's just, maybe that's just coincidence. Or maybe I was going to say, maybe Hayden Nicholson has advanced a little bit further up the corporate ladder than Marcus Bernard. Who knows? Real estate, Andy McFarlane and Connor Elridge, that has not changed. Retail, a slight difference here. Last year, we just had Chami Ratnapala. This year, we have Chami and Leo Anati. Last year in industrials, we do have a bit of a change here. There's no aerospace and defense, I've just realized. So last year, aerospace and defense was Daniel Lang. Industrials was Sam Braidwood. And this year, industrials is Daniel Lang and Ritesh Varma. So Sam Brandwood is no longer here. And no longer do we have aerospace and defense. That's interesting, because that's really interesting, because defense is a big buzzword right now when it comes to investing. Healthcare last year, John Hester and Thomas Wakim. This year, we have three people, Hester, Wakim, and Martin Jacobs. Gold, David Coates and Bradley Watson. That was also true for base metals this year. It's only David Coates. He has gold and base metals. So Bradley Watson's gone bye-bye as well. Maybe he's moved on to a better job. Strategic minerals, Stuart Howe and Regan Burrows. And also those two fellows were also in charge of energy. And they've separated that now into standalone. So Stuart Howe is now strategic minerals and processing technologies, and Regan Burrows is energy and mining services. Oh, no, they've just changed from mining services to mining industrial services. So it's not a big change. So last year, mining services was Joseph House. And this year, Joseph House and Marcus Bernard, who was also diversified financials. So busy boy, Marcus Bernard. Maybe that's why he's no longer the first person in diversified financials. So he's also mining industrial services. That's interesting. Okay, so what I'll do is I'll just go through this year's picks and just see how much has changed from last year. And I have a feeling it's not going to change. It's not going to have changed all that much. Starting with listed investment companies, probably what I might do is just decrease this a little bit so we can get the whole thing in. Yeah, well, that's maybe and then just move it like, no, it doesn't want to do it. And I'll do the same thing for this year or last year. And then we can just see if anything's really changed. And just by looking at this, no changes at all. So listed investment companies, Australian Foundation Investment Company, Metrics Master Income Trust, and MMF Capital Investments, no change. So maybe analysis has done no work at all during the year and just went with last year's picks. Maybe. I don't know about any of these companies. I'll be honest with you. I've never looked at these LICs at all, and I have no intention to in the future. So these could be great picks. I just don't know. In fact, none of these companies we don't know because we're talking about the future. Some of these picks could be completely terrible, even though we don't know just now. Okay, on to agriculture and FMCG. And no changes here from last year. So Bega Cheese, Rural Funds Group, and Elders. I would more than likely trade these sort of companies. And I have a feeling Elders might be an interesting trade right now. Rural Funds Group might be some good value there. One thing I actually will do now is just have a look at the target price. So, for instance, last year, Elders had a target price of $9.30. Now it's $9.10. Rural Funds Group had a target price of $2.40. Now it's $2.45. And Bega Cheese last year had a target price of $5.35. Now at $7. So some subtle changes in the first two, and Bega Cheese has risen in the past year. So no changes there. And again, I'm more willing and likely to trade these sort of companies, not own them for the long term, because agriculture and FMCG, I forget what that is. It's a tough business. Tough business. What is FMCG? I'm pretty sure I knew this a while ago. Now on to technology. Well, this is going to be interesting to see if it's changed. So last year, we had Technology One, Gentrack, and REA Group. I do like all three of those companies, particularly Technology One and REA Group. Now, Gentrack, maybe it's found a bit of a flaw now. Share price is going sideways, maybe even down a little bit. I did get out of that particular trade. So I'm not certain I would say Gentrack is a long-term hold or even a high-quality company. Now, they have changed it up this year. So instead of Technology One and REA Group, they've now gone with WiseTech and Seek. I do prefer WiseTech over Seek. I probably prefer Seek over Gentrack, but I definitely prefer Technology One and REA Group over Seek and Gentrack. I would say they probably think Technology One and REA Group are probably too expensive or overvalued. That's why they've gone with a few other companies here. And with Gentrack, target price last year was $10.90, and now it's $13.50. And the share price currently is about $9 to $10. There we go. So I don't mind these picks, but actually, to be honest with you, I preferred last year's picks. Okay, now on to diversified financials. Last year, Perpetual, which I'm not a big fan of, Regal Partners, meh, and Macmillan Shakespeare. Interesting enough, I am trading Macmillan Shakespeare right now. It's going well. That trade's going really well. And this year they've gone with Cuscal, which is a recent IPO. Haven't had a look at Cuscal. So something to do with I don't even know what they do because I've never looked at it. Premium, which is interesting, and Regal Partners. So they've stuck with Regal Partners and got rid of Macmillan Shakespeare, which is interesting because share price of Macmillan Shakespeare is well below the target price of $22.20, last year's target price. Anyway, Regal Partners target price $4.75. Now it's $3.35. So it looks like the share price of that company has dropped. Premium share price is all over the place. I'm more likely to trade that company. And again, Cuscal, I just don't know. I've never looked at Cuscal, even though share price or the chart looks absolutely great right now. Okay, now on to real estate. So last year they went, this is under sort of another category where I'm less likely to be interested in. So last year they went with Dexus Convenience Retail, which is interesting in itself because that is the very first REIT I ever looked at about 3 years ago. They also went with Healthco Healthcare and Wellness REIT, which has had a disastrous year. And also GDI Property Group. Don't know anything about that particular company. This year, they've totally changed it up and gone with 3 new companies. Aspen Group, not out of Aspen, Colorado. Cedar Woods, I do know that company. And Region Group. Now, even though I do know that company, I don't know it well. The only reason I know Cedar Woods is because they had this pretty big development where I used to live, or near where I used to live, in Upper Kedron of Queensland. So I really can't really talk about these three companies because I don't know much about them. Although I'm pretty sure the chart of Aspen Group looks pretty good. Even Cedar Woods chart looks pretty good. No idea about Region Group. Couldn't even tell you what they do. Apparently, they are the largest landlord of neighborhood shopping centers, owning and managing a portfolio of 100 assets. There you go. Next, we have retail. Last year, Premium Investments, Universal Store, and Propel Funeral Partners. And whenever I see that being lumped in retail, I just, anyway. Funny enough, that is one company I just have no interest in. I don't know, it's just funerals. I just don't have interest in people making money off death. It's just weird for me. This is weird. Anyway, so this year they have changed one. They've gone from Premium Investments into JB Hi-Fi, which is really interesting because JB Hi-Fi, even though they're performing well, I would say that's significantly overvalued. So it's going to be interesting to see what they say. P ratio of JB Hi-Fi is like 27, 28. Historically, we have not seen JB Hi-Fi P ratio be that high. In fact, when I bought JB Hi-Fi a few years ago, P ratio was 8. And if the P ratio of JB Hi-Fi was that low, I'd be really interested. So interesting for that. Universal saw they had a price target last year of 615. Now it's 1050. And Propel Funeral Partners last year was 620. This year it's 550. And when I ever see the price target going down, that's probably a negative sign. Negative sign. Okay, next one we have industrials. So last year we have aerospace and defense. So they went electro-optic systems and Austal. Now, if they actually did have those companies in their portfolio, they've probably done really well. So let's go on to industrials. So last year, Brickworks, IPD Group, and Cleanaway. Brickworks will no longer be on the ASX soon because of their merger with WHL Patterson. IPD Group, don't think that's had a good year. And Cleanaway, Waste Environment Services. I'm trying to remember the chart for that one. It's looking okay right now. This year they've gone with LGI and Environmental Group. Environmental Group is really small, and even LGI is quite small as well. Out of all the industrials, interesting they've picked these two companies. Interesting. I don't mind LGI. In fact, I have held it in the past. Environmental Group, share price has pulled back a fair bit over the last 6 or 7 months. Maybe there's some value in that company, but interesting choices here. I would have expected a few different companies, but there you go. Next, we have healthcare. And last year, they went with Telix, Cyclopharm, and Aroa Biosciences. And Aroa has been doing quite well. Now, last year, they had a price target on Telix of $19. And this year they've gone with Telix, Neuron Pharmaceuticals, and Monash IVF Group. Now, I think one of the reasons they've gone with Monash IVF Group is because share price has dropped a lot. So they probably think there's pretty good value in that company. I'm not going to argue with them. Neuron Pharmaceuticals chart looks absolutely stunning right now. Beautiful breakout for that company. Price target of $20. And they've increased the target for Telix up to $34. So I'm wondering what they're thinking with the share price actually falling now. So they're probably thinking it's much better value. In fact, 100% upside if they still think the price target is $34. So I have no complaints about Telix and Neuron and even possible value with Monash IVF Group. On to gold. Let's have a look. Oh, where's healthcare? Oh, they chose 5 last year. So they also chose MedAdvisor, which has been an absolute disaster. And they also had Neuron Pharmaceuticals. And last year, the price target was 28. Now it's 20. So they probably think it's more value. So, interesting. Last year, they had 5 companies in healthcare. Okay, on to gold. And last year, they had Capricorn Metals. It's been pretty good. Santana Minerals. Don't know much about Santana Minerals. Is that company in production? I have no idea. Apparently, they put a speculative buy on that one. Valuation $2.15. 15 cents. This year, they've gone with Evolution Mining, which is interesting because Evolution Mining just released their results today as I'm recording. Not as I'm recording, but earlier in the day. And the share price was up 5%. I think the results were pretty good. They've also kept with Santana Minerals, and their speculative buy is now at $1.30. So share price of that company must have dropped. And they've also gone with Minerals 260, another company I know nothing about. And I'm assuming that's also a speculative buy. Yeah, speculative buy at 28 cents. So yeah, one company I don't know anything about, Minerals 260. Next, we have base metals. So last year, Aries Resources, Nickel Industries, and Mineral Resources. I'm hoping they've gone for Mineral Resources again, because this is the time to get excited about that company, I think. But no, they've kept with Aries Resources and also Nickel Industries, but they've shifted out Mineral Resources and instead they are going with AIC Mines. Price target for nickel Industries has dropped from $1.54 to $1.51. Aries Resources has gone from 30 to 35 cents. And yeah, the price target for MinRes last year was $84. And the share price now for MinRes is 30, maybe 35. I can't remember. And in fact, the chart for MinRes is sort of a buy right now. I can't really, I'm not the biggest fan of these base metal picks. That's just me. Just me. In fact, I would have picked last year's just because I had MinRes there. Okay, now on to strategic minerals. Now, this year it's called Strategic Minerals and Processing Technologies. I wonder if that's because of Alpha HPA. Now, last year they had looks like they might have had, no, okay. Last year they had three companies, Alpha HPA and Hyperion X and Liontown. This year they've got rid of Liontown and just keeping with Alpha HPA and Hyperion X. I would classify both of those companies as story stocks. No revenue or very little revenue, if at all. Could be exciting if they make it, but still story stocks. And that's probably why they have a speculative buys on both those companies. In fact, their valuation for Alpha HPA has not changed. $2 last year. This year's $2. Hyperion X hasn't changed either. Last year, $3.85. This year, $3.85. So again, Stuart Howe maybe has gone missing. Anyway, so by the way, Liontown Resources probably is moving towards almost like a buy, just because of increasing interest in the lithium space. Now onto energy. Last year they had Boss and Paladin. This year they've just got Boss. They've kicked Paladin to the curb, and Boss Energy share price has dropped. So again, a lot of these companies' performance is going to be heavily dictated by the price of the underlying commodity they are mining. And unfortunately for Boss, they also released a pretty negative outlook or something, downgraded their resources or something like that. So share price of Boss Energy has dropped like a rot. So I'm wondering if their thoughts on Boss Energy has changed since they released this particular report. Now to mining and industrial services. So last year, SGH, which is interesting because they just released the results yesterday, my time, and the results were not that spectacular. Also, Meta Group and SRG Global, that was inspired choice. I think SRG Global has done really well. I don't think Meta has done all that well. But this year they've changed it up completely. Got rid of those three companies, now going for Develop Global. Now, Develop Global share price has gone through the roof over the last three or 4 months. 4 months. Develop Global share price might have doubled. ALS chart looks really good. I had a look at that chart yesterday. Chart looks really good. And Duratec. Now, this is a company I've owned in the past. Chart is nothing too spectacular. So it's interesting they have chosen Duratec. I will read this later, but why have they chosen? They've mentioned we see the recent share price weakness offering an attractive entry level. It hasn't been that weak. It hasn't dropped a lot. Anyway, so no real thoughts about these three mining industrial services companies. And that's it. That is it. Oh, shocking. Okay, so overall, you can see not significant changes to the companies they have picked. I'm a little bit surprised they have chosen quite a few story stocks. That's one little bit surprise. And I do like a few of the companies they have chosen. Personally, I'd probably, if I was in this sort of role, I understand that all these analysts probably are experts in their own industry or sector or whatever. But if I was picking a group of companies for a financial year, I would try to be picking highest quality possible without even thinking about valuation. That's the way I would do it, because over time, and I wouldn't change that all that much from year to year, because over time, I think you're going to perform fairly well. So there is quite a few high quality companies in this list. So if you actually go down, now I'm not sure about the LICs, and I wouldn't call any agriculture or FMCG companies high quality. Technology, WiseTech, I think is a high quality company. Seek might be. I haven't actually had a look at Seek for a while. So Seek could be like a quasi high quality company. Definitely WiseTech is. I just wish they'd kept Technology One and the other one, REA Group, because they're definitely high quality companies. Costco, maybe, but I don't know. Premium, no. Regal Partners, not sure. These three real estates, no. JB Hi-Fi, I would classify that company as high quality. So this is one company, even though I do think it's overvalued, I just wish I didn't sell. I wish I didn't sell because it is high quality, and this is a company I'd love to own for the long term. Universal Store, I think, has the potential to be high quality, and I have no idea about Propel, but I doubt it. LGI and Environmental Group, no. Telix, I would probably say Telix and Neuron, no right now, but definitely both companies have the potential to be high quality in another 5 years. And that's one of the reasons I hold them, is I do think they have that potential. Monash IVF, no. These three, well, onto mining, and I'm going to say no for all these. They're not high quality. A couple of storage stocks, and just that's what I think about mining. And even mining and industrial services, some of these I would struggle to define as high quality just because they are still a little bit cyclical. So Bell Potter have chosen some high quality companies, but yeah, some of these companies I'm a little bit surprised they've chosen. Okay, so that's all I have for this particular look at Bell Potter's financial year 26 picks. And if you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.